Right. Thank you all for coming. Good to see some familiar faces and some new faces as well. Thank you, dear panelists, also for coming. This event during the Digital Asset Summit. We'll start obviously with some introductions of the panel, of myself. Then we go and sort of hear some general thoughts from all of you guys. The sort of anticipated bull market. Last week we saw all-time highs already for Bitcoin. This week we see buying opportunity. Then I want to also sort of hear from the panelists some of the expectations, some of the factors that are important, and then we also sort of will try to look at it from regulatory side of things. Manoj. And then, we have some closing thoughts. After this panel discussion, we can all go downstairs again for some drinks and some more food. Feel free to save your questions till the end for the Q&A part. Anything else that is important, Cassandra is there to help, as always. So let me start by introducing myself, and then I will give the floor to the rest of the panel. I'm Elmer. I'm with Worldpay for 7 years now. I work in the crypto and Web3 vertical as a senior relationship manager. So that means I need to cross-sell and upsell and do all of that, but basically oftentimes I need to solve problems and make sure that merchants are happy, and that we help them to do their business and to make or manage payments wherever in the world. Before my role at Worldpay, I was the only Dutch person working for a Chinese bank in Amsterdam. So that's me. Jana? Maybe?
All right, Elmer, thank you so much for having me this evening. It's an absolute pleasure, and what a beautiful venue. As ever, I think it's impressive. So we will try our best to do justice. I'm Jana. I'm the Chief Executive of OpenPaid. I'll start with just a few words about myself, and then talk a little bit also about the company, although it is difficult, or more difficult this evening, to explain what we do, and I'll come to that point in a moment. So by way of background, I have been with OpenPaid since its foundation. That is getting very close to 7 years now as well. I'm a lawyer by background, so very happy to get any questions on legal and regulatory this evening. No guarantees on giving the right answers, though. Prior to joining OpenPaid, I worked with another payments firm. So my background is not strictly crypto, or actually not crypto at all. That's the rest of the panel. What I bring to the table is more the traditional regulated financial institutions and e-money. And very, very happy to be here. Shall I talk about OpenPaid now, or do we do that in a moment?
Go ahead.
All right. The reason why I said it's more difficult to explain who we are and what we do is because normally when I speak to a new potential customer, what I would say is, we do payments, we can help you make and accept payments, and we do this faster and better and cheaper than card payments. But given our very generous hosts this evening, and given that they are the masters of card processing, I guess I need to find a slightly different way of explaining who we are and what we do. So please do bear with me, because it's going to be a first. The first thing to say about OpenPaid is that we are a regulated financial institution. So unlike some of, the other panelists, we are regulated as an e-money institution across the UK as well as in Europe. And essentially what we do is we help crypto exchanges, crypto clients, to actually send and receive payments through alternative channels, alternative to the card rail, I mean, in that specific case. That is really primarily the bank transfers. So what we focus on is access to the different banking rails across geographies, and really the ability to issue virtual IBANs both for our customers but also their underlying customers, and whether that is retail in mass in the millions or whether that is institutional. So I'll stop there. I'm sure we have an opportunity to speak more about this.
Cool. Ash, maybe you want to go next?
Thank you very much. Pleasure to be here as well. This is an absolutely amazingly lovely building. I am Ashley Pope from BCB Group. I'm the Chief Product Officer at BCB Group, and I look after all of our products across all of our entities at BCB. We operate a payments institution out of the UK, so we're a regulated entity. We're also launching an e-money institution and a VASP in a European jurisdiction in the next couple of weeks, touch wood. And we offer numbers of products and services to our clients that span across payment accounts, multiple rail connectivity and optionality across FPS, SEPA, etc., Fedwire. We also offer an instant payment network called Blink that allows our clients to pay, settle, and receive and exchange money instantly between each other. We offer Forex and crypto trading as well as an additional service. And then finally, we're building out our crypto payments, storage, and analytics capability for a crypto product suite that we're building out and augmenting our existing products with. The primary focus of BCB is really to enable our clients to store, trade, and move money as quickly as possible. And our client base spans crypto exchanges, market makers, LPs, investment funds, anyone that has a crypto business or business that is directly operating in the blockchain space. We're there to help them and to provide them with service in order for them to be able to send, receive, store fiat money, but also crypto money and value as well. Before BCB, I was at a place called The Workshop. We were developing an end-to-end crypto payments and custody and proprietary analytics platform that allowed clients to performantly process, I would say, around 5% of the Bitcoin transaction volume daily for the gaming use case. Had a couple of startups previous to that, one that allowed individuals to save crypto and earn fiat interest before DeFi, one that allowed users to vote on the blockchain. We partnered with Oracle to develop that particular solution. Built a rugged mobile telephone at one point in time, sold it to the UA police force. Before that was in the legal field a little bit, but not to the same extent as Liana. And at the start of my career, I was in music, toured around the world a bit, played at Glastonbury, and had a couple of records out on Sony Universal Music. That's me in a nutshell.
Cool.
Evening, everybody. Marcelo, I'm the CFO of Weird. I hope it's a bit easier to explain what we do for a living. We help clients to buy NFTs and crypto with fiat credit cards, in a nutshell. Very soon in the near future, we're going to be offering that as well with current account payments. Potentially can even use OpenPay and other solutions for that. We are a VASP regulated in Europe, and we have licenses in the US. We're registered with the FinCEN in the US. We offer our services in 188 countries. Yeah, and has been an amazing journey that hopefully I'll have a bit more time to talk along the evening as the questions come along. How did I get there to the CFO job? I have a second hat, hidden one, which is I'm one of the partners of a venture capital that invests only in blockchain and crypto. In the middle of crypto winter, Weird started growing a lot, and they needed someone to help them to grow on the finance side. And I was volunteered by my partners to become the CFO of Weird. And they grew. It has been a success story even in the middle of the crypto winter. They grew 3 times sales last year, and this year it's has been very interesting, to say the least. Even bigger growth with all this excitement about crypto coming back. So I hope we have a chance tonight to talk a bit about all that exciting things going on.
Cool. Over to you.
All right, good evening, everybody. My name is Nikola Plečić. I head commercialization for Visa Crypto Initiatives globally. At Visa, we see this as a very exciting innovation space. We want to act as a bridge between traditional kind of networks and exciting new blockchain propositions and digital assets, and kind of connect them to our network of 14,500 plus financial institutions and 130 million plus merchant endpoints. I would say our kind of focus at the moment is primarily on supporting on and off ramps, so making sure that you can use your Visa credential to purchase crypto at any Web3 merchant category, whether it's buying an NFT through Worth or buying a Bitcoin at a crypto exchange, making sure that this is a smooth experience, and then also ensuring that you can off-ramp from from crypto to fiat, and use your Visa link card to spend those funds, or maybe use one of our products such as Visa Direct to push those funds to a different endpoint. A little bit about myself: 6.5 years at Visa, started in strategy, then joined the fintech team when Revolut and N26 were roughly under $1 million, or just about then. It's a very long time ago, and through that work I kind of encountered the challenge of onboarding Coinbase for Visa Europe, and I was part of the broader team supporting that, and from there I was acting as an SME for a number of conversations, and as we kind of grew the team, I joined it full time. Before Visa, I was at Bain, so just passing here tonight brought a lot of memories and long nights. So very excited to kind of be in this nice environment to enjoy the evening. So looking forward to it.
Cool. So that were the easy questions, the introductions. No, I'm joking. More in general, let's say, if you talk general thoughts, trends, developments, recent developments, or expectations for 2024 that shape the landscape, what are your thoughts? Maybe start with you, Nicola.
Yeah, so I would say, like, from our perspective, we are really interested in two kind of major innovation trends. One is kind of, we wanted to see where blockchain networks will go, and they can be either private or permissionless, and they enable kind of a new way of effectively having a single source of truth ledgers for moving assets around, and those assets are in form of tokens, which can be either fungible, like I don't know, Bitcoin or digital dollars, or non-fungible, like some of those NFTs, whether they're collectibles or gaming assets, or maybe even like real estate deeds. And from there we kind of see today a lot of these ledgers are kind of existing independently, and kind of seeing what the innovations are being brought this year, and to kind of put it all together is something that really excites us. And also beyond that, we're always kind of following the market and kind of seeing where the direction will go. So we are seeing a lot of interest picking up in the consumer space, so kind of keen to see where and how we can support those flows coming in and out of fiat and crypto and other way around.
Nice.
So from our perspective, like of course 2024 has been an amazing year. Like crypto excitement is back, but together with that, a lot of hype, and of course this is the first question I get when I say that I work in crypto. So is this a bubble again? Are we about to burst it, and is this gonna all get destroyed again? So the main difference from this current cycle from the previous one is that institutional clients are not excited at all about crypto yet, which is a good sign, which means that this market has legs for quite a while. Of course, retail always gets super excited, and there's memes. We can talk a whole night about like different memes and so on. Like the latest token that went up 300, 400%, whatever. But the institutional clients that come with large amount of money, they're not excited. They are cautiously optimistic. They're thinking, okay, looks like crypto's not gonna die. The US has authorized the ETFs to Bitcoin, which in my view, this is not because crypto go up, but this is very important to make sure that crypto will not die, because now you have $50 billion worth of ETFs worth of crypto, and if Biden administration or any other one try to kill that, it's gonna cause a massive damage to the US economy. So this is like a crypto putting the foot on the door of the institutional markets, and that it's pretty much irreversible. And this is great news. Like, regardless of the price action, this is a separate matter, but this is the main big thing of the ETFs. Now, of course, the projects that are coming up that I hear on these conferences and so on, a lot of them, they are very similar to the ones of the previous cycle. What I'm seeing and more interested in seeing companies like Worldpay and Visa going deeper into payments of USDC and so on, because this proves their commitment. And if they are there, and think about this, sorry, I'm going to put this a tiny bit on the spot here, but it's a US company that it's all the way into crypto. And you cannot take this lightly because, like, it can have all sorts of different repercussions for them if the government really wants to shut it down. And they do believe that this is important for them. And they're going deeper and deeper and doing the settlements and so on. We're taking settlements in USDC from Visa already. So this is what's exciting of 2024 is that the large institutional players, they are reinforcing their commitments towards crypto and that as a solution for a lot of problems we have in terms of payments, and the system we have here was created after Bretton Woods in the 70s is all old pipes and they all need a renewal. And I come from traditional finance myself, so just seeing this happening, it's amazing. It's like a really refreshing.
So I think that being in crypto for quite a long time and seeing and hearing about the promise of crypto generally over the past 6, 7, 8 years, I think it's nice to finally see an activation of a particular use case. And I think the payments use case is probably one of the simplest use cases to activate at scale. And we're seeing that over the last couple of years with the use of stable coins for transaction settlement and instant finality. What that does present is the rubber hitting the road really around regulation from our point of view. So what is actually acceptable and possible within a particular jurisdiction from a reg point of view? Because technically, as everyone's alluded to, anything's pretty much possible in tech. You can send money instantly, you can tokenize whatever you like, but is it legal? Is it compliant? Is it possible within that particular jurisdiction and across multiple geographic jurisdictions? And then what we've seen over the past few years is harmonization of rules and regulations, especially within Europe. I think Europe's leading, and that's great to see. And obviously with MiCA upcoming as well, for certain particular types of crypto use cases, that also is welcome for firms that are operating within or utilizing crypto in one way, shape or form in order to facilitate instant payments. When it comes to more advanced, I would say, use cases, so if you look at decentralized markets and we look at tokenization, I think there is still a few barriers to entry for those particular areas to develop quite quickly and in a sophisticated manner. If we look at tokenization, there's still the issue around secondary markets and how those are set up. When we think about DeFi, there's a lot of credit risk, market risk, technical risk, that needs to be addressed. And I kind of see 2021-22 as a bit of a MVP for DeFi. It was a bit of a global MVP, and we saw a lot of hacks. We saw a lot of issues with smart contracts, quality of contract, etc. And I think that is still to iron itself out. But for me, one of the main trends this year is how the traditional finance worlds of fiat payments, crypto payments merge together and start to interoperate in a way that really provides that benefit of speed, finality, accessibility, 24/7, 365 operation, and we see that develop into really the bedrock of a new financial system.
Nice. Yeah.
Well, just I guess for me to build on what Ashley is saying, because we sit at the gate, we sit at that intersection between the traditional finance and the crypto world. And I guess we see a few things that are shifting. Probably the first thing to say is that in previous bull runs, we saw these massive spikes, whereas now in the last, I guess, 24 months, we have seen people really focusing on building products, building out the infrastructure in the background, and really preparing for what is coming ahead. So the first, I think, difference this time is going to be around the maturity, in a way, of the infrastructure that underpins some of that growth, which in itself is going to drive what we hope a far more sustainable bull run, rather than having a huge spike and then we all sit here asking ourselves, oh, what just happened? We're hoping that there will be a far more sustainable value creation over a more prolonged period of time. So that's one thing. The second thing, just building on the point around regulation, I think regulation is definitely there, and we can talk an awful lot about how this is going to impact innovation on a go-forward basis. But I think one of the main things that it is also going to impact, and it's open for debate whether that's going to be good or bad, is the access and the cost. What I mean by that is the following, and I'll give you a practical example. So I think we all agree that crypto at the start was really conceived by the desire for anonymity and the desire to remove intermediaries in a peer-to-peer environment. And ultimately, removing intermediaries means removing the cost. Now, if I take one simple example of financial promotions regulation here in the UK, that regulation is actually bringing back the intermediaries, because for a crypto firm to offer any services lawfully here in the UK to a retail consumer, they have to be regulated themselves, right? Or if they're not regulated themselves, they have to use an authorized firm, an intermediary, to actually approve the way that they shape their products and the way that they communicate to the market. And I guess we're getting into a scenario very quickly whereby something that has been conceived to take the intermediaries out in order to reduce the cost and open up the market, right? Keep it free and accessible to all, is starting to close down. Why? Because suddenly you need an external party, one type of intermediary, to say, yes, your product can be conceived in this way and you can market it in this way. That costs money immediately. So what are you doing as a firm? You have to pass on that cost to the customer. So it's starting to build up and build up. So this is really the second trend that we're seeing. And I guess I'm not saying it's all bad. I guess as a lawyer, I can't really say that, because on the other hand, we're seeing that regulatory push is also doing a triage in the market, and a lot of the bad actors are either starting to disappear or will soon disappear. But we're definitely seeing a shift in the environment that we all operate in.
Yeah. So bear markets are for building. The bull market is looking to be more sort of sustainable regulation. Marcella, if you look back and you said last year, even though there was a bear market, there was still growth in Word. What have been sort of the biggest challenges for you guys?
Mm-hmm. I slightly disagree with Jana that I think eventually the banks will be replaced by the blockchain, and the smart contract as the intermediaries. Like the person of trust no longer needs to be a bank or a lawyer most of the time, and OpenPay eventually, I guess, will get FCA regulated directly or indirectly. So you don't need necessarily to have a middleman there anymore, like the old ones, like banks or like legal firms. So, but it's a process. It's painful. It's frustrating. The FCA is extremely slow, and it's very painful to deal with them. And I appreciate that, and I'm sure she suffers a lot because of that, have nightmares at night and everything. But we'll get there, and we'll get rid of the old intermediaries, the old school intermediaries. I think they're going to be gone in a few years. So going to your question, 2023, yes, was a very challenging year, particularly because of the US. For us, the most difficult moment was when Signature and SVB went under, because we were banking with some of those banks. And basically, it was a bit like this. So the regulator killed these two banks and said, to turn to the other banks and say, and if any one of you deal with crypto, we'll do the same to you. So basically, we became almost outlaw. It was impossible to find a bank that would want to bank with us in the US. So it was really, really challenging situation for a month or two. We had like one bank that we're dealing with, but we need 2-3 banks per operational entity to be able to operate properly, and they were all gone. And I called at least 30 banks and got like a 26, 27 no's. It was like a really challenging time. So once this was true and we managed to sort it out, things stabilized, and then even in the middle of the crypto winter, NFT demand stayed there, differently from crypto. So volumes grew 3 times. We'll get, what are the competitive advantages of Weird, but that's going to be for a bit further down. But this was the main challenge for us. Was a year of 2 parts. Until September was a horrible year, and then October completely changed. But the memories are very hard here.
Yeah, I remember that as well.
Yeah.
Last year. Hey, Nicola, you guys at Visa, have you seen like a recent uptrend or more sort of fiat to crypto on-ramp payments through the visas? Or?
Yes, I would say like 2023 was a very challenging year, and I would say to kind of add what you're building is, apart from those events with Signature and SVB, it was preceded by FTX, by BlockFi, and the list can go on. And there was a kind of loss of, I would say, consumer confidence in, to extent, centralized exchanges, is probably why your business benefited quite, I guess, from that trend. But more than that, there was a general disinterest in 2023 from a retail side, to a degree from consumers in crypto. And we are kind of seeing signs that this is recovering.
Yeah.
We are seeing signs that it's recovering across the board for all type of Web3 merchants. And again, it's very, very difficult to predict where we are in kind of the market cycle. If you look at the Bitcoin price, it's all-time high. Yeah. But then if you look at, as you mentioned, some of the institutional sentiment, it's not there yet. So hopefully that means that we are probably somewhere at the early start of the cycle. And we do expect that, we kind of constantly monitor this, and we would hope that there is a growth in the market in 2024 and beyond.
Yeah, I hope so. And
we all hope that.
Yeah, no, for sure. And what are your expectations on the bull market, and how do you then diversify as a word?
So it's, just looking at the very young and recent history of crypto, it seems to be like 3-year cycles, and with this year is particularly special because we have the halving. Trying to time the market is impossible. So what you need to do is be in and stay on it, and if it goes down like it's going this week, you add a little bit, and and understand that it's volatile. So you size your position so you don't get stopped out, or you don't do something silly that you put your finances at risk. We think it's the first year of at least a 3-year cycle that the banks are talking 150,000 for Bitcoin. So at 60,000, you're just starting it, really, right? Yeah, it can go back to 40,000. Yes, of course it can. It's very volatile. It's probably one of the most volatile asset classes that is out there. So you really need to be cognizant of that and size your position as a part of an investment portfolio so you don't get damaged.
Yeah. Hey, and Jana,
I'd just like to add to that, actually. I think individuals got into Bitcoin and crypto because the main use case really was get rich quick, right? Everybody who cared about crypto was like, well, if I invest some money, it's going to increase by 1,000, 10,000, 20,000, 30,000% in the space of 3 months. And that was the original use case for crypto, was just a get rich quick scheme, right? And basically don't be the bag holder when everybody tries to exit. And I think now the payments use case is actually being activated. So I think longevity for crypto and blockchain in of itself is really around the usefulness of the technology. It's not really, crypto gets treated as one industry, but it really isn't. It's pretty much building with blockchain technology. And you can do a lot of things with blockchain technology that you can do with existing technology, and you can do other things that you can't do with existing technology that are quite useful. Yeah. And I think it's activating the use cases, going back to Jana's point, around utilizing trusted infrastructure and secure infrastructure that then are actually useful and valuable to whoever's using that particular means and method of producing the outcome.
Yeah, no, sure. Hey, and Jana, if you look at it from your perspective, where do you expect investments to be made or dollars to flow, let's say, in the upcoming year?
Yeah, that's a really good question, and I couldn't agree more with Ashley that we are, I guess when we talk about crypto, people tend to focus on the price of the Bitcoin, and that is a very, very, very limited portion of the potential of the underlying blockchain technology. So I'll try and answer your question with a focus around crypto as a means of transferring value, because frankly I'm not educated enough to talk about all other use cases. But if we look at it from that lens, in terms of investment on a go-forward basis, I think it really goes back to the same point around infrastructure and building infrastructure, both from a blockchain as well as from a fiat perspective, to broaden the reach. So from a blockchain perspective, more on building out that trust and security. From a fiat rails perspective, I think ultimately the growth will come from mass adoption. To get to mass adoption, you need to build a much better bridge between the traditional banking and payments world that we have today and that blockchain technology. Now, the only way that that can be achieved is by ensuring that there is, first of all, reliable, instant, ideally, real-time, and fairly cost-efficient ways of bringing fiat in and out of those systems. And I think this is still a huge challenge, perhaps not so much for us here, where we're used to very much to Visa, MasterCard, as well as the instant payments of, say, faster payments, the faster payments network. But when you go outside of these well-developed markets, there is huge untapped potential. And when we speak to our clients, all large exchanges, they're all looking at their own growth through getting into these markets. And the reality is the first hurdle that they face is the conversion on the incoming side of the payment. So I guess from our perspective, which is somewhat limited at being at that gate and being that bridge between fiat and crypto, it's heavily investing in infrastructure to be able to support the growth of our customers across multiple geographies, and in the background also heavily investing in regulatory compliance as well, because that's now expected from regulators across the board, and that's for both the fiat side as well as the crypto side of things. So boring, but
that's a nice
infrastructure is important.
Yeah, nice bridge to the next topic, so to say, and the governance and regulation side of things. With crypto being so global by nature almost, and sort of some of the regulations that we've seen coming into play in Europe with MiCA and everything. Do you expect that there will be more like overarching regulatory frameworks that are coming, and how would that sort of act as a tailwind, I would say? Yeah, you said it already a little bit, huh? What is your...
I would not necessarily... I mean, there are different ways of answering that question, right? The first thing to say is, yes, I absolutely expect that there will be more regulation, not just in Europe, not just in the UK, but in other markets as well, and we're seeing this on a global scale. I equally expect that we'll be facing the same issues insofar as harmonization is concerned as we do today with data protection and open banking and everything else, where we wish we had harmonization on a global scale. Is this regulatory drive going to be helpful for the industry? Yes, absolutely. I think what is really important is that the regulatory changes are introduced in close collaboration with the industry, and we're seeing that UK regulators are doing a good job on that front. The FCA is doing particularly well on that front with all of their product and sandbox initiative, all the consultations that have been launched, etc., etc. So I think insofar as regulation is introduced in the right way in collaboration with the industry, it will definitely help build out, first of all, the consumer trust, that trust that we desperately need on the retail side for mass adoption, and will also help push out some of the bad players in the market, because I think, unfortunately, what we have seen, especially in Europe, in some of the smaller jurisdictions, exchanges that can be set up with virtually no licensing, no registration, very limited capital, and this is really where we start seeing the problems. This is where we see massive spikes when it comes to fraud, consumer fraud. This is what is really driving a lot of the bad press around crypto. This is what is driving a lot of the nervousness of regulators around fraud and consumer protection. So I think definitely expect very positive developments over time.
Yeah.
Over time. Again, we're not going to reap the benefits in perhaps the start of the cycle, maybe not even in the end of the cycle if we make the assumption that it's going to be 3 years, but over a prolonged period of time, we definitely expect that this is going to build more sustainable growth.
So if I may add on that, I would completely agree with you, Jana. I would say that regulation is required to effectively put an overlay on how transactions are governed, whether it's fiat on-ramp, off-ramp, or actually transactions on chain. And without having this regulatory overlay, it's very hard to kind of push mass adoption and have like thousands or kind of millions of payments being pushed and processed, or kind of money transfer being done on blockchain networks. That I would extend it beyond just consumer case also to traditional B2B flows. On the retail side, I absolutely agree that there is need to build consumer trust, but even more so on the B2B side, where kind of the real economy is conducted, where kind of funds are flowing in trillions of dollars on an annual basis between different countries. And I would say their harmonization is likely going to come in a very long cycle, and in between, you're going to have different jurisdictions passing probably like somewhat different regulations, which will treat same use cases very differently. So probably it'll be harder for, say, Worldpay or kind of Visa or other kind of big global companies to have a one-size-fits-all product.
Yeah.
But we do expect that kind of midterm that all the regulatory changes will establish some sort of rules of engagement and enable people to build and scale even if they start locally, and then at some point they extend to like more global products and solutions.
Sorry, go ahead.
This is almost crazy, right? That the industry is craving for regulation, and the regulators are unwilling, in the US particularly, unwilling to regulate.
Yeah.
And until this happens, it's very difficult to see the mass adoption, because the banks will remain on the fence until there's clear regulations for them. Try to make a transfer from Santander, HSBC, Barclays to buy crypto anywhere. In the UK, it's impossible. You have all sorts of different things you have to do to be able to do that. It's extremely difficult. And for mass adoption to happen, you need to have these regulations in place. And the regulators, particularly in the US, they're looking and saying, okay, we spent 10 years building something called CRS, which is a cross-reporting for tax purposes. And then comes these guys on blockchain and is going to destroy all this work that we have done. Like, okay, no way. So regulation will be required for mass adoption. The US is still the dollar is still the center of payments. And until they come on board, it's difficult to see retail mass adoption in size, because it's going to come through the banks. And if the banks are there, things would work, because it's much easier for people to get on board. But right now, it's a struggle. You really need the commitment. You need to learn. Is a very high learning curve. Open a wallet, send the money to an exchange, and then buy an NFT. It's super complex. That's why Weird does what it does, because there's a bunch of layers missing in the middle there that would make it much easier for the consumer to start using crypto for payments. And it's not there yet, and I think we're a few years away still.
Yeah, I think it's quite interesting around the payments use case, because if you look at faster payment schemes just globally, how they tend to develop, they usually start with a retail use case with quite a low value per transaction, and then they move up to perhaps a high value per transaction for a retail use case, and then they move into the business use case at a low value, then a higher value. And so I think within Europe, for instance, we've got the SEPA scheme, which is, I think it's 999 billion euro is the amount. 999 million euro you can transfer in one transfer in SEPA. And then the SEPA instant scheme is 100,000 euro per transaction. So that in of itself kind of disintermediates a little bit. When you think about how easy it is to get into and out of crypto, it kind of disintermediates crypto within Europe for low value payments, because you don't really need to use crypto for that. You could just transfer crypto within Europe, transfer a fiat within Europe without using crypto, and it's near instant, below 100,000 euro. So I think the faster payment schemes will catch up. So they're a competitor to crypto in certain ways. I mean, you've got Swift GPI as well, which is a global payment initiative, and it works nearly instantly, and you have transaction finality quite quickly for Swift fiat payments using GPI. And then when we think about tokenization and the central securities depositories, I think the benefit of tokenization needs to be really proven out over the next year or two, and why that is better than actually the incumbent methods that are already in existence. And if it is, how then do you actually persuade the incumbents to start adopting this other means and method? So there is, I don't think crypto is a panacea by any nature, or utilizing blockchain to produce an outcome is a panacea at all. I think it really depends on, what are you trying to achieve? What's the outcome? What's the benefit? And what's the best way to do it? Or what's actually the way that the most people can understand how to use it? And the example I like to give is, if you think VHS and Betamax, VHS was far inferior, but it was actually easier to scale, and the cassette players were cheaper, and so that won out over Betamax, which was actually better technology.
I'm old enough to remember that. So moving on to the next topic. What's next in the industry for you guys? Maybe what are you excited about that sort of breaks down barriers for?
Yeah, very, very, very good question. Obviously, we are excited about the bull run that everyone is talking about. We are hoping to see more and more growth and more volumes coming through the system, but that goes without saying. In the meantime, I guess what we have also on our end been busy with is building out additional rails, additional connections, setting out presence in some European countries so that we can actually offer to our customers that localized experience. So for example, if you have a French consumer and you want to collect from their French bank account, as an exchange, having the ability to issue a virtual IBAN that looks and feels very much as if it's issued in France by a French bank. So we have also been focusing very much on developing that payments infrastructure that we can bring to our customers, and really very much looking forward to see the developments both on the retail but mostly on the institutional side, because I tend to agree, Marcel, with what Marcel was saying earlier, is that we haven't really seen the activity picking up on that front. I think the environment is definitely right, especially with the upcoming changes also around the use of stable coins, in particular here in the UK. There is plenty of movement that will hopefully get in the next 12 months. So that's really our focus for the time being.
Cool. What about you, Ashley?
So pretty similar, I would say. Really trying to maximize the amount of venues and the amount of locations and the value types that we can transfer, store, and exchange for clients. In terms of a longer-term view on what may be helpful to industry, I do think that developing some form of distributed or decentralized identity that is KYC'd or KYB'd and checked by regulated institutions globally that have agreed a certain standard set for that particular identity, to then allow that identity to be utilized to onboard into other financial institutions where the level of KYC and KYB that's contained within that identity is of the relevant complexity or has the relevant information. So if I was to give an example, if Openpay and BCB agreed on a certain level of onboarding and KYB for particular client sets, and we trusted each other to collect that data and information in a particular way, if I had a client that onboarded with BCB and they were granted this particular decentralized identity, they could go to Openpay and actually just commence service because Openpay trusted that BCB had done a good job, right? I think we're quite far away from that, but I think what that would do is potentially unlock use of financial services for businesses, especially when the onboarding cycle is actually quite long. It takes quite long to get into the financial service and be offered that, and it would actually unlock that and make it easier for businesses to traverse across different financial services around the world.
Would make my life easier as well if I onboard a new entity.
Not necessarily a message I can bring back to our compliance team
No.
tomorrow morning,
Not
just yet. But no, I think that's an excellent point, because if we were to progress on that front, that can, I guess, help offset some of the other costs of some of the other new intermediaries that have been injected into the process. Obviously, the cost of compliance, the cost of onboarding and the ongoing monitoring is absolutely key and is really the major cost when it comes to payment processing. So one area to definitely spend more time on and invest in.
What's next for you, Marcelo?
So from our perspective, it's of course very exciting markets. We're looking to increase our capillarity on ways to help more people to get into their crypto and NFT, whatever they want to buy on the blockchain, in an easier way. So one of the advantages of Weird is that we managed to, so remember what I was mentioning, how complicated it is, and people need to be committed to getting into blockchain, learning how to operate in a wallet, to open an account on an exchange, and so on. And with a Fiat credit card on Weird, usually on your first purchase, under 30 seconds, you're fully done. And that's like really not the industry standard. People that are buying their first NFTs, they go like, if it takes more than 10, 20 seconds, they say, something went wrong, this is a scam, and they try to cancel it. Right? So because we partner with companies like Worldpay and other providers that allow us to generate a kit on the background that, the experience for the client is super smooth, and, it's over 90% acceptance because of that. Like, if you stay under this, 30 seconds, people say, okay, it's the normal processing time, and they're into their journey. So what is next for us is to increase this capillarity and giving more options for clients to be able to purchase NFTs and crypto with their current accounts, other options of cards. We just onboarded Amex, JCB, and Discovery, which is doing great for us, increase the volumes. And now we are developing in the US ACH payments with a partner there. So that's a project for should be ready, up and running in the end of Q1. So yeah, it's looking very exciting from our perspective 2024.
Cool. And what about you, Nicola?
Yeah, I would say first and foremost, we're looking to continue working on some of the exciting product initiatives, such as stablecoin settlement, which we partner with Worldpay. We see this potentially unlocking a lot of value for our principal members on the issuing and acquiring side, and hopefully for their merchants as well, as we can hear from Word. We see this as a new way to kind of engage with both the kind of traditional and the kind of crypto ecosystem, and kind of find ways to partner with both. Yeah. And we're excited to kind of continue to build and scale that initiative moving forward. Then we are also exploring a lot of work with central bank digital currencies. We have engaged with a number of, I think, over 40 central banks globally. We've been working with them on various projects. We I think, participated in MAS Singapore and Lyft and Drex in Brazil, and more recently kind of working with Hong Kong Monetary Authority. And I think there we kind of published a couple of interesting solutions on offline payments and interoperability, and we even found a way to work with a retail CBDC and put it on a card. So those are kind of two exciting initiatives on the product side. And on the what we would call traditional acceptance side, we are always looking for ways to optimize the kind of ways in which our rules are written, such that we can support the business and the ecosystem to grow in a healthy way.
Nice. Then moving to the last part of this discussion, closing thoughts. Try to turn it around a little bit. If you have to mention one use case or initiative or sort of project that you're excited about in this entire space, but then from another company, so not your own company, but another initiative. Jana.
All right. Okay. I'm not necessarily fully prepared for that question.
It can be general. It doesn't have to.
Yes. If I may answer the question without giving you a specific name, but what I'm particularly excited about is to see the drive from certain UK banks, some I guess some of the more well, it's one bank and probably going to be difficult without giving away too much, but it's around the general drive to move and adopt stable coins as I guess as means of exchanging value and adopting it alongside the, I guess, traditional legal tender. What we are seeing from recent market players is a definite push in that direction, and I think it is really interesting to see the drive coming from a regulated credit institution on the stable coin front, and the potential for adoption across a very wide range of use cases in traditional finance.
Interesting. Cool. Ashley?
So I'm going to follow Ayana's approach as well. I wouldn't necessarily call out a particular company, but one of the most interesting trends I'm seeing, and I think things that's going to become more important, is offering that interoperability for clients and for businesses to send and receive in one type of value and then pay out in another type of value. So a use case could be receiving USDC and then auto exchange into euro and then crediting either a payment account or crediting an e-money wallet with e-money on the obverse, and doing that automatically to give optionality for clients who may be collecting from abroad or who may be wanting to remit in a different currency to the one that they're receiving. It sounds like it's quite simple functionality, but it's actually quite it's actually not that simple in order to do that in a completely compliant flow where you're making sure that you're checking the inbound as you would fiat money, making sure that the inbound is safeguarded during and before the actual trade is executed, and then settling that trade back into whatever fiat currency may be, and making sure that those funds are obviously adequately safeguarded as well. And you're reconciling, obviously, because we're in regulated institutions, we have to reconcile all fiat payments. And I do actually think that there will be a case for and actually operating exactly the same way as fiat, where crypto flow should actually be reconciled, because there is no requirement right now. There's no prudential requirement to safeguard crypto flow. I think that probably will come, and I think that will be really welcome. And that will help to wash out some of the bad actors that we've seen over the past few years who really haven't paid any consideration to making sure there is a separation of client funds and own funds and safeguarding client funds.
Okay, interesting.
So, on my end, it's not. I'll tell you not a name of a company, but what is the sector that I think it's kind of very exciting for me, which is basically I see quite a few companies, small companies that are building on-ramping businesses on the background of good infrastructure like the one provided by OpenPay. That without that, would be impossible for you to, with your bank, to basically onboard yourself into crypto. So with my other head of venture capital, I speak with a number of companies that are small companies that are building onboarding businesses that allow you to send your money, let's say, from HSBC into a IBAN, and then from there onboard it on crypto without any hassle, because you're sending money from Marcelo to Marcelo, and the bank just doesn't get involved. It's a way, kind of the industry found a solution until the regulation is more clear and broader for everybody. And that's a great help of easing the initial journey of people taking money out of their bank account and just hopping it on into crypto and to do something about it without having to beg your bank to be able to do something with your own money. So yeah, we invested in a few companies that are doing that actually.
Interesting.
Well, yeah, I got to go in a completely different direction.
All right.
One of the key things that I really, really don't like about crypto is when people start talking about being crypto native. If you have to be native in something to use it, it's kind of like I'm not native in C++ programming, right? So I can't program.
Yeah.
So I'm always looking for really interesting products and stories which actually focus on the UX, UI, and the product itself, and you kind of don't even know there is a blockchain and crypto element. And I think part of it started at, during COVID when you're all living together and you live with your partner, and you kind of listen to what each other talk. At some point, my wife asked me, hey, how do I buy an NFT? And I started explaining, hey, on-ramp, and this is like a wallet, and you need to write this key, and if you lose it, it's gone. Yeah. And she said, like, you're making this deliberately hard for me. And, you know, the UX UI just wasn't great. And the company that I saw, like, maybe 5-6 months ago, it's a company called Cosmo the Gate, and effectively it's not usually what I would look at, but I went to Singapore and met some friends, and they were showing me this app, which is effectively I think it's a K-pop follower app, so you can buy some stickers from your favorite K-pop artists, and with it you have some ability when they come to your town, you can kind of vote which song you want them to sing, etc. If there is like a 40, 50 holders and 30 of us watch, say, song 1, that song wins. And this is all powered by like NFTs and Polygon, but the experience is so good that actually from a consumer perspective, you log in your, you know, seeing whatever your email address, it feels like a regular app that you have in your phone, and you don't even know that it's powered by crypto. And I think we need to see, I would be excited to see a lot more like apps and kind of solutions like this, because they're really great consumer experiences. And that's going to kind of put all the complexities and issues in the background and allow all users across different ecosystems to use crypto natively.
Just works then. Yeah.
It just works.
Yeah, yeah.
Well, it's a bit like the internet where you had to put the numbers in for the website, right, before. And
Oh, yeah.
now you have a
remember that.
resolution into a name. Right?
Yeah,
It's
now you
actually
have
usable. I don't have to
DNS.
remember 12 numbers, right?
Yeah. Interesting, yeah, for sure. Thank you all for coming. Thank you, dear panelists, for making the time and making this first time moderating easy for me. So I would say a round of applause.
Thanks.
Yeah, thanks.